Hey guys, Mike here. So obviously the stock market is blood red on all indices today. Basically what happened was the 10-year treasury yield peaked above 1.85%, which we haven't seen since the beginning of 2020, before the pandemic. And so, that spooked some people. And plus there's other things going on this week that you need to know about that can affect the markets and cause all this turbulence as well, not just that. And so, this is something a lot of people have been calling for. And, here's one of the guys that's been calling for it. And so far, he's correct, starting out 2022.
Turn to you first because you told our producers you think this could be the week that it breaks down.
Yeah, and it is the S&P 500. Obviously, we're all aware of what the NASDAQ's been doing. It has broken down. But if you have even a modicum of attention that you've paid to valuation, you're not getting your rear end handed to you. It's really the S&P 500 that if you're a diversified investor, you're paying attention to. So here's the deal. It's been 15 months since you've seen more than a 5% decline in the S&P 500. Every dip during those 15 months has been bought, and I believe that's because of the cash that the Fed's been injecting into the financial markets. So with the Fed pulling back, this is it, all right? If we get down to 45.30 on the S&P 500, which is 6% down, then I think we are getting that 10% correction, which I've been calling for this quarter. And frankly, I believe it's going to happen. I also believe it's healthy.
I understand. He goes on to say he still thinks we're in a bull run. He just understands that we haven't seen the S&P pull back 10% or more since March of 2020, okay? And that's why he's saying this is healthy. Flush them out, right? Now, of course, the QQQ, the NASDAQ's feeling it even more if you hold growth stocks. And so, but it's the S&P that we need to correct, not the NASDAQ. And so before we get in the charts, hit the like, subscribe button if you get anything out of this. And let's go ahead and show you exactly what he's talking about, key levels we're talking about, and the other things going on this week that could help push the market lower, or at least make it an extremely volatile week. And look at the SPY here, guys. You can see it's breaking down below a major support level here. Those black box numbers you see, that's just the fear and greed index. I kind of like to keep track of that or whatever. But that's the 10% sell-off mark right there on the SPY around 430. And then on the NASDAQ, or the QQQ, excuse me, it's breaking down below another major support level, and also the moving average. And you can see that's the 10% sell-off. And I marked a 20% sell-off because the SPY sells off 10%. You can guarantee the NASDAQ is going to be close to almost 20. And the one to watch out for too is the Russell 2000 here, ETF. It has held this key support level since the beginning of 2021, but it broke down through it today and it got rejected multiple times trying to come back above it. And so that's something to watch out for. And what's happening, plain and simple here, guys, is the FANG stocks plus M are selling off, right? You got Apple down 5%. You got Amazon down 5%. You got Facebook down almost 6%. Google's down 6%. Microsoft down almost 10%. Netflix is getting crushed. It's down more than 15%. And the reason why this is such a big deal is because I've told you before, FANG M here. Look at the percentage they make up of just the S&P, right? It's almost 25% really is where you're at here. Anywhere between 21 and 25, depending on where the stocks are at. They're probably less now, obviously, because they sold off so much. But that's a big deal. And then you look on the QQQ, and it's more. It's almost 34% FANG stocks. That doesn't count Microsoft. So anywhere between 35 to 36% is what those 6 stocks actually make up. And so that's the problem we're having, because people feel like, man, my portfolio sold off like crazy, right? And you're right, because I think it's 40% of stocks on the NASDAQ now are, below the 200-day moving average. I mean, they've just been crushed, right? But the problem is the FANG stocks have just propped this market up, right? They propped the indexes up and kept going up and up and up to nosebleed type ratios. And now they're selling off. And because they make such a huge portion of these indexes like they never had before, you saw on that chart, right? How much they used to make up versus how much they are now, post March 2020, that, anytime they sell off, the whole stock market is going to sell off. That's just the way it is. And they've been selling off, you see by the chart. And so it's good to get them down to whatever levels the institutions want them at, wherever they feel comfortable at, because when those turn around, the market's going to turn around. That doesn't mean all the individual stocks are, but the indexes will for sure, just because they make up such a large portion. The other thing that's not helping is the banking stocks, which are supposed to be doing really well. They've been reporting mixed earnings like crazy, like I've told the members. And so that's a problem right there, because they thought the banks are going to be rocking and rolling, and you're getting mixed earnings coming through, and they're missing their expectations and stuff. And so that's another problem you got. And then something else you're looking at here is you have monthly options expiring. And so I went back over the last 4 months to kind of show you the volatility that can be created for sure with this. And you can see this is just December last month, right? You see the sell-off going down, major drop, following up that next Monday. And so this creates a lot of volatility, because you can have a lot of manipulation taking place from the institutions and the market makers, because they don't want to lose money on what they have holding. And you can see in December it was about a 2% drop. If you count the major drop falling that Monday, it was around 3.5. This right here is November. You can see the volatility right here. It actually ended up for that week right there around 0.17%, so basically flat. And then going back to October, you can see it sold off for 3 straight days before gapping up the last 2, so it actually ended up positive for the month of around 1.06%, but you see the major volatility there and all the gaps. Then just going back to September, you can see it just slowly, just like a roller coaster, it kept going down over those few days, and then opening up that Monday, it gapped majorly down. And if we try to measure this right here, you'll see for the week, you were down around 1.5%. If you include the gap down that Monday, it went down almost 3% on the SPY. And, you know, I was telling you about all those NASDAQ stocks being down so much. You got stocks, percentage of stocks down 50% from 52-week highs. Right here is 40%, roughly between 38 to 40%. But you can see we've been here before, right? Multiple times that we hit this line. And when we did, you saw a nice move up on the NASDAQ. The only times they went above this line was when you had the crashes, right? In March 08, dot-com bubble. And so I don't think anybody's expecting a crash per se, but you can see this isn't the first time we've been here. We were back here in 2019. We were back here in 2016. And so, you know, we'll see what happens. That's why, you know, people could be expecting a major move up on the NASDAQ at some point in time when these stocks start to rally. But until the SPY or the S&P, whatever you like to use, actually either, I think, goes through a correction, figures out where it wants to bottom, and I mean, when I say that, I mean the institutions where they feel comfortable at, then, you know, I don't think we're going to see any kind of rally in the NASDAQ, not a meaningful rally. You'll see some pops. You've seen them last week, right? We'll pop up 2% a day, yay, and then we'll go down 2% the next day. But right now, it's extremely volatile times. You got to buckle in. You got to just have cash ready. There's no reason to panic about it. It's not do you any good, right? And so the good thing is, after all this selling off in 2021 in the NASDAQ, we ought to build some calluses up, that's for sure. And you're just kind of sitting back, waiting for the institutions to feel comfortable. Because you look today, almost everything sold off. I don't care if it's transports, financials, whatever. You know, everything was just selling off. It really didn't matter what was happening. Healthcare, didn't matter. You know, everything was just going down. You had a few up, like Disney was up a little bit. I don't know if it ended up. And there was one other one, but it was just kind of some odd. That Tupperware was up a little bit, you know, just odd names here or there. And so, you know, this is really almost kind of like a wait and see in a way to see what the SPY is going to do. Is it going to continue to breach those major levels and moving averages, or is it going to settle down and start moving back up? Because, you know, every time it dipped over 2021 and even starting 2022, that dip was bought up. Well, that doesn't seem to be happening a lot lately. And so we're going to have to see if the 10-year treasury yield starts to come back down, because last time it started to come back down, you saw the market start to rise again. Again, I'm in the camp of pull the Band-Aid off. Let's just get a 10% correction on the SPY so we can settle down the volatility, and I think we'll begin to move up steadily. I think that's what will happen, but who knows? I mean, let me know in the comments what you think. But it's just all about the S&P right now, guys, in my opinion, and what the data shows and everybody I'm hearing from. So, again, always like your opinion. Let us know down in the comments. Just want to put this out there, so if you get anything out of it, please hit the like and subscribe button for me, guys. I really appreciate it, and I'll see you tomorrow.